Well, I'm now joined by the international editor from financialradio.co.uk. He is Binu Thomas, based in Bangalore, and we're going to have a look at what's going on in India. Of course, Binu, the Fed has been in the news because it's made an announcement on interest rates in the last day or so, but also India's had its own announcements as far as monetary policy is concerned, hasn't it?
Yes, that's right. The Indian Reserve Bank of India, which is the central bank here, has been on a tightening spree for the last 3 years, and it was expected that there will be a cut when it announced its monetary policy on 29th of January. Unfortunately, that did not materialize, and it disappointed the markets somewhat. The main concern, of course, is regarding inflation. And the Reserve Bank fears that if it were to cut rates at this stage, inflationary pressures could get out of hand.
What is the inflation rate in India at the moment, roughly?
The inflation rate right now is about 3.8%, which is historically not a very high rate. I mean, we've been used to rates of around 5% in the past. But over the last 4 months, the rate has been trending up, and the Reserve Bank is concerned that a cut is made at this stage to the interest rates, it could spike up again to 5%. And the concern is particularly because we're getting into an election year this year in India. I mean, 10 states are going to the polls. So inflation is a very sensitive subject, given that 50% of the Indian population lives on less than $2 a day. So rise in food prices in particular would be disastrous for the government if that were to happen. So inflation is of paramount importance. Which is why one suspects the Reserve Bank did not make the cut this time.
Does the Indian Reserve Bank have the same balancing act at the moment that we're seeing across, in the US and the UK as well? On the one hand, they want to try and stimulate the markets because of of all the upset at the moment, and that would lead them to cut rates. On the other hand, as we've just been discussing, they've got to worry about inflation. So it's a very fine balance, isn't it?
Not so much in the Indian context. You'd appreciate that, we're having economic growth at the rate of 8.5 going on to 9%, which is a very different scenario from what it is in the U.S. So stimulating growth here is not really of paramount importance as far as the Reserve Bank is concerned, unlike, say, in the case of the U.S. Federal Reserve, which is why, for them, inflation would remain the most important thing that they need to keep in check. The economy is still chugging along at about 8.5% plus, and I think there are not too many concerns as far as that is concerned. So the situation is a little different from what it is in the States and also in many other developed countries.
So what are the markets focusing on in India at the moment? What's likely to move the markets? What are they watching for?
Well, we have the annual budget, which is coming up on February 29th, and the markets would be looking forward to some kind of an economic stimulus from the government. There are some concerns about growth slowing down, and it is expected that the government would give some tax breaks, particularly in terms of direct taxes. The reason for that being that direct tax revenues have grown some 40% this year compared to the previous year. So the government is, sitting flush with funds at the moment. So the argument is that this has come on the back of a fairly, good tax regime. The maximum tax rate in India is about 33%. And the expectation is that if the government were to lower it even by a few percentage points from here, the net collection which the government could get would be far greater than even this 40% which it has got this year. So that's the prediction that maybe a small tax cut could help.
It certainly sounds like they can afford it. I mean, a 40% increase in the tax take sounds huge.
It is, and it's not something that has happened in the past. Of course, the Indian economy, as you know, has been on a different growth trajectory in the last couple of years. So, partly it's the result of a fairly low tax regime at about 33%. I said is the maximum rate, both for corporates as well as for individuals. But the other reason, of course, is that the overall economy has been growing. So the pie has been getting larger, and hence the government has been getting more money as well.
Now, India is a very sort of hot topic in the UK, in the US. A lot of investors are looking to participate in the Indian market. You know, it's not just at the sort of the investment bank level now. It's coming down to the private investor level who's looking to put some money into India. What's the best way for an individual to do that, to invest in Indian stocks?
Well, there are broadly only two routes that a foreigner can use to invest in Indian stocks. One is you invest in a good mutual fund, which is, directed towards India, and there are quite a few of them. All your major fund houses, Templeton's, Fidelity, as well as HSBC and others have India-focused funds. So one could buy into those funds and, get an access to Indian stocks. The other route, of course, is via the depository receipts. The American depository receipts largely listed on the New York Stock Exchange, as well as the global depository receipts, which are listed on the London Stock Exchange, for instance. You could, of course, buy into these, and then there are certain underlying shares which these depository receipts represent. So then again, you can get to own Indian stocks in that manner. So these are the two broad sort of avenues for investment in Indian stocks. And actually the first one, which is the mutual fund route, I think has yielded some fantastic returns for investors in the last 4 or 5 years. There are funds which have generated as much as 1,000% return over the last 5 years. But interestingly enough, if you look at their performance over the last year or so, many of them are sort of in negative territory simply because of these recent falls that we've had in the stock market.
They sound two very interesting ways of getting into the market. And one thing we could have a look at perhaps next week when we discuss this further is how to find out about the Indian economy, where to go, which publications, online publications to look at, and to learn a little bit about the companies as well and the makeup of the Sensex, because I think a lot of Western-based investors don't really know much about the specific Indian companies.
Certainly, we can have a look at that next week, Giles.
Binu Thomas from financialradio.co.uk. Thanks very much for joining us today.